All right, what's going on, family? This is Paul McMillan II, and welcome to another backtesting session. Um, in this backtesting session, we're going to go over a strategy that I typically use to trade in the market. And one of the things that I trade in the market is particularly NAS100, is one of the indices I trade, and I love trading the indices. I love trading them. Um, so I want to go over some steps on exactly what I do when I get on my New York sessions in the morning. So the very first thing that I typically do is mark up market structure from the 15-minute to the 4-hour time frame. So what I typically do is I typically go back in time as far back as possible until price is no longer recorded. Let me pause this recording until I get to this point, and then I'll show you what I'm talking about. All right, so I typically go back as far as price is recorded. So in other words, when price is no longer showing after this point, then this is where I start. So then what I typically do is I take a vertical line, place it here, all right? And then what I'm going to do is, of course, save my progress. The very next thing that I do is I start marking up market structure using horizontal lines in zones in the market. And basically I place these under areas where price is gathering liquidity and making moves based off the institutional orders in the market, which causes imbalances in the market. Okay, so this is going to be yellow. Then I'm going to make it, and that's when I start marking up key areas. So as you can see, price hit this both as liquidity, created an imbalance in the market here, and another move here, and then another instant move up to here. So this is letting me know exactly where price is interacting when it comes to these zones. So that way I have a clear idea of where price is going to possibly go in the future, all right? Now, once I mark up these areas, then I'm going to actually mark up my zones under these areas, okay? Right. Right there. And I'm going to put it up here. So now these zones are marked up for the 15-minute. Then the very next thing I do is go to the 30-minute. And then I go back once again all the way to the same area that I marked up before. So as you can see, some of these areas are marked up. So then I go back to that vertical line, and this is what I marked up before. So then what I do is I zoom in and start marking up off of the 30-minute time frame. So then what I do is take another horizontal line, because you can see how price interacted with this zone here. And I'm going to change this to green because this represents the 30-minute zone. So I do that, and the same thing down to here, okay? And I start drawing my zones off these, okay? I'm going to change this to green. Right now, that's marked up. Let me see if there's anything else that needs to be marked up on the 30-minute, possibly not yet. So now that I marked that up, I'm going to go to the 1 hour. All right. And then what we're going to do is we are going to mark up the 1 hour time frame. What I forgot to do is I forgot to put a vertical line for the 30-minute time frame, but I believe I started right up in this area here. So I'm going to put a vertical line here. And then I want to do the same thing for the 1 hour time frame. And so I'm going to actually start marking up the 1 hour time frame right up in this area here. So I'm going to put a vertical line right here. Okay. So then I'm going to start marking up my horizontal lines for this. And this is a good one. And this is going to be red. That represents the 4 hour, the 1 hour time frame zone. So I want to say I see it here. All right. See another good zone down here. Also see one down here, and I'll kind of mark that up. And then now that I marked that up, we're going to mark our zones there. All right. Let's do one here. All right, so now we did a 1 hour time frame. So now we're going to move to the 4 hour. All right. And so then what I typically do on the 4 hour, I'll typically do the same thing, unless it's a situation like this to where when I see current price, everything is still marked up. So as you can see, even though we marked up the 1 hour, current price is laying on our 1 hour zones. So I don't have to draw any more zones at this point. So we see current price. So now at this point, what we're going to do is we're going to go back to the 15-minute. Okay? And this is where what price is at on the 15-minute time frame. Now, what I'll probably do is sometimes on the 15-minute time frame, if I got to adjust my zones a little bit, I'll do that. And I think in this situation, I can adjust the zone and maybe push it up here. Matter of fact, I'll move my horizontal line up here, and I'll just draw another zone, just make it a little bit thinner. I like that. I might change this to purple, just to, spice it up. So then now I'm at current price at this point. So at this point, we have completed step 1, okay? Now, in this situation, this is when I go ahead and move on to step 2 and identify the current trend on current price. And so as you can see here, price went into a downswing here to this next zone. So price was going on to a downtrend at this point, okay? But price is also kind of ranging as well. So at this point, I feel that price could go either way. So at this point, now I may change this in the future, but at this point, I would say that price was bearish at this point. Now, if price breaks this trend line or break a certain point, then it's going to be considered bullish at that point. The price is considered bearish at this point because of the downswing. You can see that. So then at this point, I'll put a note here and say bearish trend line. But it's a possibility that I might change that in the future once I get more data. All right. But I'm going to say bearish trend line. 15 minutes. That's what I will put. Then, of course, just put my trend line there. Now, at this point, the very next thing I do is just turn on a higher high, lower low strategy indicator. Because what this does is this lets me know where current price is as far as on the highs and lows in the market. Okay. And this is going to help me to determine my breaking points. And that's where I put my X factor line. So what do I mean by my breaking points? So when you look at price here, this is the next high that price would have to break in order for me to consider buying up, okay? So then I will put one of my X factor lines here that lets me know, hey, prices cross this point, you need to buy, okay? Now, the next lowest point I see here is this point here. But prices, well, let me back up. The next lowest point I see to where price last hit as far as support is right down here. So I would actually bet for price actually bounced here and went up to a bullish candle. So in order for me to either consider selling it, I would actually put it here because I see a low here, and I would have to see price push all the way down and break past this because I see a most recent low right in this area here, okay? So that's where I would put my X factor lines. X factor is just another way of putting lines together that let you know which way price is breaking past, okay? You want to always wait for the break and retest when it comes to buying and selling in the market. Doesn't matter what you're trading. That gives you extra confirmation that price is going a certain way. So that's what I do with this indicator here. Once I've set up my X factor lines with this high and low strategy, figuring out my breaking retest points, then I'll turn this off, and now I'm going to locate order blocks in the market. Now, order blocks and imbalances. Now, you probably wonder, what are imbalances in the market? So these are institutional moves. Now, if you're new to trading, you want to learn as much you want to learn as much retail as possible. Retail is going to help you to learn the basics and learn the basics of trading, so that way you understand the basics of the market and know what you're doing. The very next thing you're going to want to learn is institutional trading. And one of the ways that we capitalize on institutional trading is imbalances in the market. And that's when institutions put in buy or sell orders, and they're putting in trillions of billions of dollars of money into these orders, which as a result makes price spike up very, very quick to the upside or to the downside, kind of like these here. So when that happens, the institutions makes a lot of money off of that order transaction. So say, for example, with this transaction here, okay? This is the last imbalance institutional move they made here. And price sprung up extremely fast to the point where, yeah, they made a lot of money off of this buy order, but there was a lot of sell orders that went unfulfilled. So on that buy order, they were billions and trillions of dollars in profit, but on that sell order, because of these sell orders weren't being fulfilled, they were also in billions and trillions of dollars in the negative, okay? So it caused an imbalance in the market. And when that happens, the institutions have no choice but to sell off or to send price back to those imbalances to make their money back before going to the next move, okay? Because they don't want to stay in billions and trillions of dollars in the hole, okay? They want to try to make their money back as much as possible. So we see that here. There's a lot of imbalances here, and in this area. So at a certain point, they're going to have to come back and sell off at least half of this or all of this before they go up to a certain point. But the $1 million question is, are they going to fill these imbalances up here first or down here? And that's a $1 million question. So when I look for these imbalances, I use these as take profit points, okay? So then, because that lets me know exactly where price is going to go. So I'm going to actually just erase this zone because I don't need it right now. So now that I know that, like I mentioned before, I use these as my take profit zone. So I take my horizontal raise, put a take profit here, put a take profit here, okay? And I use that as opportunities to smash the market. all right? And then for the buy, there's one up here, so on and so forth. So now that I see that, the next thing I typically do is go to my order block indicator. And I go to my settings here and I turn on the order block finder because I want to see if I can see order blocks in the market. So order blocks is where the institutions are putting in these orders. So anytime when you see order blocks, that gives you a high indication that, hey, the institutions put in this sell order before and it made price go down. So price might come up with liquidity, grab this area for liquidity and then sell down even more. So it gives you a clue as more of an idea on where price is going according to the institution's orders. They have the power to drive price up and down sporadically, as you can see in these orders here. So now that I see this order block here, it gives me a strong indication that price is probably going to sell down. So I just make note of that, but typically I just wait until the 9:30 bell to know that for sure. So now that I know that, what I typically do is put my risk to reward tools in place. The reason why I put these in place is because when I set these and click on these, it's going to have my stop loss and take profit ready for me to paste in my MetaTrader 4. So that way, when price break and retest any of these lines and go the direction I think it's going to go, I'll be prepared to either hit the buy or sell button and be in that trade instantly. And then that way, once I'm in the trade, I'll be able to gauge on when I'm going to close my first partial trade and my second. So in this situation, when I'm trading NAS specifically, my goal is to get at least 10 pips worth of NAS. So I can easily get that with this first profit, maybe if I go down to here. So I would probably just put my first take profit maybe down here. That's my goal. And then down here, this will be my second take profit. So then once I have that set, then I'm good to go. Hold on for a minute. Give me a second. My internet's acting up. Let me pause this recording. Okay, I'm back. So my internet should be fine now. So that's going to be my stop loss and take profit for the sell. Now, I'll also put my risk to reward tool for the buy as well, because the institutions could decide, hey, you know what, we're just going to buy price up and fill up this imbalance, create an all-time high, and then send price spiking down to fill all this imbalance down here. They could do that. So you want to always come up with a plan B. So again, my goal is to get at least 10 pips worth of NAS, which is probably about around 500, or maybe more than that. But I try to get 500 pips worth of NAS, and that's going to be my first take profit here. And then my second take profit, which is all the way up to here, is going to be over 800 pips of NAS, may even go up higher. So then I got that set, okay? So then once I'm done doing that, then I kind of make a decision and I kind of just wait close to the 9:30 bell. And then if I see price getting closer to any of these lines and then finally break and retest it, then I just go in for the buy and sell. And I'm going to show you that in a minute once I play my replay tool. But the very next thing I do is turn on my Delorean EMA indicator. Now with this EMA indicator, usually we jump in when this indicator supports or acts as extra confirmation on top of our analysis. And basically the way it works is when the yellow EMA crosses the red EMA, and especially the blue EMA, it usually signals a very strong trend. You can see that even here. If I highlight the yellow EMA, you can kind of see that the yellow EMA kind of crossed, I want to say, up here, across the blue EMA, and then it caused price to shoot up sporadically in a bullish trend. So you would have made a lot of money with that. So when I look at current price, the yellow EMA has already crossed the red EMA. So that's kind of already a sign that price is kind of bearish already in this sense. So then I will make note of that. I'm trying to highlight so you guys can kind of see the EMA. There we go. So price is already crossed down. So it's a possibility that price might maybe hit this top, maybe, and then maybe come down and cross again and then sell down. But you never know, price could cross above and buy up as well. So I will wait for the 930 bell and wait for that wait for that break and retest here. And so then once I get that clear confirmation, then that's when I would actually jump in. Let me pause this recording real quick.
Hello, I am calling for Palm.
Okay, I'm back. Sorry about that. Had a phone call. So now, what I'm going to do is just play this replay one by one and show you guys exactly how I enter into the market and why I do it the way I do it. So now, I'm going to kind of zoom in so you guys can kind of see price a little bit better here. Let me do this. This is crazy. Try to make it fit the screen a little bit more so you guys can see it. I just do it like that. Okay, so you guys should be able to see price pretty good at this point. I might come in a little bit more. Yeah, we'll just do it that way. So you can kind of see price right here. So then, let's go ahead and play the replay and see what price ends up doing. Now, you see that? So price formed a banker's candle. And so at this point, the yellow EMA, which already has crossed the red EMA, I believe it might have crossed again, or it continued to point down. Yeah, it continued to point down. It went up and just shot down. So at this point here, if I see price break and retest and close down here, or if I see a strong banker's candle that at least points out to here, then I'm going ahead and selling. Okay, the sell button is already hit at that point. Now at this point, from the entry here all the way down to here, that's 600 pips worth of NAS. I would have made my profit already and closed my first partial trade easily. Okay, now let's see what else price does. Okay, and so now I believe I put you know what, I probably would have put my second take profit here. Maybe that's probably what I would have did. Maybe up to here, but we'll see. So price is still pushing. So now my second partial trade would have still been going. That's 947 pips of NAS going. And it dropped even further. So now we're at over 1,600 pips of NAS caught. And now price is kind of pushing back and then it's pushing down again. And so now you got, you know, over 1,700. Now let's see if price ends up hitting this second take profit. Now when we look at the RSI, price is pretty much oversold because it's hitting the very bottom, but let's see if it takes it. Might pull back and then come down and hit it. Okay, so now it's coming back down again. And then what do you know? Hit the second take profit and hit this imbalance down here. And now it's going down even further. So it just goes to show that our analysis was pretty much correct. We got the analogy that it was going to sell based off of our indicator, based off of the fact that it's showing a red order block up here, especially up here where price continue to go down. But then also the fact that this move here created a lot of imbalance previously, so they had to get back into the positive, like I mentioned before. It's called mitigation. Now at this point, I would say that price is probably ready to come up. It's reversing up now. But I would have been out of this trade. I probably would have been out of this trade, maybe even down here with my second partial trade. But if I decided to stay in and let it catch it down here, my second partial trade would have been closed here. And so then at this point, you basically won the trade. And that's a lot of money we made. But then you can kind of see price pull back a little bit to mitigate this area. And there's a possibility now they're probably going to shoot price down to this zone, which they did, touching the zone here. So then if we would have decided just to let that partial trade run, it would have been even more money at that point. But that's exactly how I actually trade in the market. Excuse me. So, you know, typically that's how we get consistent big moves, because we're trading institutional imbalances. And those are the type of moves that you want to consistently be in, because those are the most powerful and consistent moves from the institutions. So that's it for this back testing session. I'll see you in the next one. Hope you guys enjoyed this session. Take care. Bye.